All right, good morning, everybody. It is Monday, July 1st, 2019. Welcome to Stock Market Today, presented by Chaikin Analytics. Normally, we've got Dan Russo in this chair, but he is still on his honeymoon, week 2. So it is Nick Webb, and it's a pleasure to be here on this bright Monday morning. Got a holiday week coming up, and so everybody is looking forward to getting away for some time and some barbecue and some fireworks. But what's going on in the stock market? Well, it ended up, the week ended strong on Friday. There was good news pre-market for both the banks. They passed the Fed tests, and the chip stocks based on positive momentum coming into the trade talks. So both of those factors led to a decent day for the stock market, which was good to see. However, the market continues to live in this narrow channel with support at 28.75 and resistance at 29.50. But there is going to be a much higher open today with the positive Chinese trade negotiations restarted. I think the markets are going to test resistance, and I think they're going to break through. Still of a concern is money flow is negative. We're looking for a new catalyst, and maybe this is it to bring money into the market. There's a lot of money sitting on the sidelines, both institutional as well as personal. So if there's good news in the market, there is fuel to grow the market higher. So the market in a minute, you can see from the right-hand side, all the major indices were doing very, very well. Bonds were down. The big sector winner was the financials on Friday. Small caps continue to have a great day. We'll talk a little bit about that later on. So over the weekend, as everybody I'm sure has read, the Trump-Xi meeting led to no major breakthroughs, but accomplished really what the goals were, which was to restart the trade negotiations. In addition, they threw in a couple things. US can sell to Huawei now, so that is going to make the chip makers very happy. And China has agreed to buy some agricultural commodities, which, you know, is, you have to feel bad for the farmers in the Midwest right now, because they've just, between all the rough weather and then this, it's just been really hard for them to make ends meet. Indexes ended the week on a high note. We talked about that. As one major risk, which is trade, is removed, the market's going to respond well. You know, you've got that risk reward calculation always going on. So once, if you pull some risk out, then that's going to move the markets higher. As I mentioned at the start, this is July 4th week. So you should expect high volumes on the freeway, but low volumes in the market. So everybody is planning an early getaway. The markets do close early on Wednesday, but they're open for a full day on Friday. And there's a blockbusters earnings report that gets released on Friday. So, you know, there's things that are going to be happening, so people should stay tuned. Market will do very well today. Friday is going to be an interesting day. If we go to where sectors have been moving, there's quite a lot of movement in these charts recently. Materials stays on top. They're up about 1.5%, a 1.5 based on the last 5 days. Real estate remains in the gutter, but you see a lot more sectors reaching into positive territory, which on Friday, this chart had everybody in the red. So materials, financials, industrials, and energy all moved into the green over the last 5 days. I would expect there will be more green coming up. I would fully expect tomorrow's chart to show technology well in the green. So as we rotate through an industry every day, today's industry is the Dow Jones REIT services. So over the past 6 months, this has been an underperformer. We look for it to continue to underperform. We're not actually very bullish about this sector or subsector. It's moved down 7 slots in the past week, and you can see what's happened to the real estate market on the left-hand side of the screen. It has not been doing well. So I took one of those. I took Seritage Growth and did a quick chart on it. You'll notice there's a new feature. This is brand new within Chaikin Analytics. I'll describe it in a little bit, but let's read the chart the way Chaikin would read the chart. Start in the top left, very bearish. We're not proponents of this REIT. You can take a look at our track record over time. It's not been one where we've seen a lot of positive movement. You know, this stock has traded in a slightly down band in the last 4 months. You can see so Chaikin's bearish on it. Relative strength, which is the market indication, is slightly bearish on it. So the market doesn't particularly like this stock. And then money flow, which is sort of the institutional money, or what we call smart money, they're not fans of the stock. So all 3 proponents of this stock are negative. So this is not one we would recommend in any way, shape, or form. So this is a new feature we put into Chaikin Analytics just over the weekend. It just sort of sums it up just almost the way I just did, which gives you, you know, what is the power gauge rating, relative strength. Basically, it allows you to sort of cheat and go right here, and then this checklist gives you a sense of where things are. So interesting new feature. We've gotten a lot of good feedback on it, and it just makes it a little bit quicker. If you're having a hard time reading the chart, just go right to the checklist. Morgan Stanley is our stock of the day. This is not a buy recommendation. This is just, you know, for information purposes only. We just pull out a bullish rated stock and we do a quick analysis of it. So you can see its financials. We break the power gauge, this, you know, sort of summation, this very bullish summation, into 4 categories: financials, earnings, technicals, and experts. It's bullish in 3 of the categories. Technicals, however, are rated poorly. So by and large, this is fundamentally a great stock. I believe you'll start seeing the technicals turn around. So this actually has some momentum. So again, just reading it from the top, very bullish. Chaikin likes this stock. You can see over time, we started getting bullish in late March, early April, and we've been bullish for a while now. It has not performed as well as our ratings would have told you it would have been. And that's primarily, I would say, because long-term interest rates have been going down, which has really hurt a lot of the banks out there. You can see relative strength does not like this. So the market has not been a fan, and money has flown out of Morgan Stanley. So there's a little disagreement in the participants in the market. It'll be interesting to see over the next couple months whether or not Chaikin wins. But Chaikin has a very bullish viewpoint on Morgan Stanley. You can see that it had a great day along with all of the major banks on Friday. Yesterday's big movers, well, you had Western Digital. They obviously were reacting to the sort of positive momentum in the China trade situation, and a lot of the chip makers were. They'll have another good day today, actually. Constellation Brands, which has the ticker STZ, they had a great quarter. Their earnings report came out, and they just it was a great report, good guidance. Everything was pristine, and so the market rewarded them. Conagra is just they had a horrendous Q2 report probably about 5 days ago. Market pummeled them. And this is sort of a, you know, maybe the market went a little bit too far and it rebounded a little bit. Same's true actually with AbbVie, where it's regaining some of the lost ground after it announced the merger, the acquisition of Allergan. AbbVie had a just horrendous day in the market. and it just may have gone a little bit too far, and so it started picking up. Westinghouse Brakes, they got some good news on one of their customer fronts on Friday, so they had a good day in the market as well. On the flip side, the losers, Dow, you know, they show up in this report either on the gainer side or the loser side. Right now, they have so much volatility in their price. So this kind of is a normal day for them. Biogen, on the other hand, was downgraded early in the morning, so they had a rough day all day. Raytheon, they're planning a spinoff or a merger with UTC in their aerospace division, and that merger is getting panned almost universally. And so I think this is the market sort of having them understand that the market is not behind this this merger. CBOE, this is the Chicago Board of Options Exchange. They have a pretty high volatility in their prices as well. Same with ROL. Just stock price, these are normal stock price movements for these stocks. So, you know, sort of in that category of nothing to see here. So we already talked about Constellation Brands. Great quarter, beat by 14 cents. This is not just a penny or two. We've seen anybody that beats just by a penny or two, they actually don't do well in the market the next day. Constellation Brands beat by 14 cents, so the market did reward them. WageWorks, on the other hand, missed, and missed pretty badly. So they're not a happy camper. It's going to be a quiet day in the markets this week in terms of earnings reports. You know, there's plenty of other fuel in the market, so they're not really missing out there. But overall, I would guess that this is a very light week in terms of earnings. But we talked about it at the top of the show. Finally, a good week for small cap. This chart just basically compares how are the small caps doing relative to the S&P 500. And when you get this little burst up here, the small caps are actually outperforming the market in general. And that's unusual because the large caps have just been absolutely, you can see, they've been dominating. And so small, ever since the, you know, start of the year, they've had a great run. So, you know, we're going to keep an eye on this because this could be a trend. There should be some mean reversion at some point because there's some great small cap names out there. But at least the market has really been very much driven by momentum, and these large cap growth technology stocks have by and large been driving the market for the past year. That's changed this year as it's been wider breadth, but small caps have not really benefited, and it was nice to see them having a good week. Same is true for value stocks. Actually are, you know, they have, you can see they have not performed. This is the Russell growth over the Russell value. So you know, if growth is winning, the stock, this line is going up. And you can see it by and large, with the exception of the market, whether it's a bear market or a correction or a, you know, this, with the exception of that period, it has continually gone up. So it was nice to see again, for 1 week, some of these value stocks having good weeks relative to their growth brethren. So it'll be interesting to see if that continues. We will keep an eye on it. I guarantee you, Dan, when he's back, is really takes a look at that, wants to know what corner of the market is supplying growth to the market as overall. And so these types of charts really give you an indication of where the price increases are coming from. So just a quick pitch. Whenever you can, if you haven't already, you should sign up for Chaikin Analytics Power Feed. It shows up in your box. It helps you keep up with our program here. Just go to chaikinanalytics.com, today /today. So thanks a lot. This is Nick Webb. I'll see you tomorrow.